This week's US CQM Forecast Alert is: multiple approaches are needed to forecast the current economy. This week, economic growth rate on the expenditure side was revised downward because of an increase in real import due to low import prices, as well as a decline in business inventory changes, and that on the income side was adjusted downward because of a decrease in both non-farm proprietors' income and corporate profit caused from low industrial production index and weak retail sales. This graph shows that the economy is weakening. The average economic growth rate of both the expenditure and income sides, which is a better measure of economic growth rate, has fallen to 0.53%. However, the economic growth rate on the income side, which is not directly affected by the surge in imports due to Trump's tariff policy, is still high at 2.34%. The PCA forecast, which also takes into account financial market indicators such as stock prices, money supply, and interest rate spreads, predicts economic growth in 2025 Q2 to be 2.26%, roughly the same as the income side of the CQM. The growth rate of the GDP price deflator is somewhat higher at 3.39%. Regarding inflation, the downward trend until last week appeared to have bottomed out and is now showing signs of increasing. However, the inflation rate itself is still not high enough to be of concern. The growth rate of the GDP price deflator is about 1% lower than the PCA forecast. In economic forecast for the current quarter, which are updated daily with economic indicators, focusing on forecast of just one economic index such as GDP on the expenditure side can lead to a mistaken assessment of the overall economy. Therefore, to make a correct assessment of the economy, it is essential to take multiple approaches, not only GDP on the expenditure side, but also from the income side and the PCA forecasts. Naturally, forecasts from these approaches will differ, but it is up to the economist to interpret them. Conclusion from this week's US CQM Forecast Alert. The first, the US economy is beginning to show signs of slowing down. Second, as a better measure of economic growth rate, the average real GDP growth rate on both the expenditure and income sides is slowing to 0.53%. The third, however, the economic growth rate from the PCA and the income side of CQM are around 2.3%. The fourth, there are concerns that inflation has bottomed out and is starting to rise. However, headline inflation is still low at 1.44%. The fifth, multiple approaches are essential to properly assess the current economic situation, and economists need to interpret the various forecasts without changing the projected figures. This slide contains additional information about this week's detailed CQM forecast.